Welcome to Agricultural Development Trust, Sharda Bai Pawar, Mahila, Arts, Commerce, Science College, Sharda Nagar, Baramati. I am Professor Poonam Mishra, brought for you the subject Bookkeeping and Accountancy, under which we are learning Reconstitution of Partnership, Chapter number 4, Retirement of a Partners. So, retirement of a partner is a situation where one partner leaves the organization. So, students, we are going to learn the practical problem number 1 from your 4th chapter, that is retirement of partnership or retirement of a partner. So the question says the balance sheet of Mr. Mama, Kaka and Baba who shared profit and loss in the ratio of 4:3:3, and this is the balance sheet information available to you and the adjustment. The retiring partner is Kaka, means the second partner is a retiring partner. He is getting retired on 1st April 2018. So till the date of 31st March 2018, this is the financial position. So considering this financial position and after the adjustment, doing the adjustment for this further transaction, we have to prepare profit and loss adjustment account, balance sheet account, Kaka's loan account, or we can say the partner's capital account. Okay students, so let's get started for that. First, I have already told you that always start with the balance sheet which is already given to you in the question, and we have to check that whether we are getting any profit and loss and general reserve amount or not. So students, as you can see in the balance sheet, there is general reserve which is already given to you. So students, what we do with the general reserve, we have to distribute with the old partner or the existing partner who were there. Okay students, so what is the amount of general reserve? It is given 6,250. So that 6,250 will be distributed in the old ratio, that is 6,250 into star stand for multiplication sign. So 4/10 will be Mama's ratio, and 3/10 will be Kaka's ratio, and 3/10 again will be the Baba's ratio. So this general reserve will be distributed among the partners. So the journal entry for this will be general reserve account debit to partners capital account. So we will go on the partners capital account credit side, and then we will write, first we have to record the opening balance which is given in the balance sheet. You can see here 20,000, 15,000, 12,250 that I have recorded here, and the general reserve is distributed into the old ratio. So 6,250 is distributed, and we get this amount 2,500, 1,875, 1,875. After that, nothing is there to take from the balance sheet. Now we have to do the adjustment, we have to solve the adjustment. So what they are saying that the share of Kaka in goodwill of the firm is valued 2,700. So basically only the goodwill is being valued till only to the shares of Kaka. So Kaka's share is 3/10, you already know that student. So the journal entry for this will be goodwill account debit to. So better what we should do, we should prepare one goodwill account in a working note, so you will be not confused how to take the amount and all students. So better goodwill account you have to prepare. And student, there is no need for the gain ratio because the goodwill is not being written off, it is not being write off, it is just valued to the share of the retiring partner. So the entry is goodwill account debit to retiring partner. So goodwill account debit to will write Kaka's capital account, and that is the amount is being given 2,700, and in the Kaka's capital will go and write on the credit side that by goodwill account in Kaka's column 2,700 student. After that, what adjustment you can see? Yes, furniture is to be depreciated by 10% and motor car. So let's see what is the amount of furniture. The amount of furniture is 17,500 and motor car is 4,000. So let's write that in the balance sheet. At the same time we will deduct the depreciation as well. So furniture amount is 17,500, motor car amount is 4,000. So 10% depreciation we will deduct, and outer column will go 15,750, and less again here depreciation on motor car 12.5%, it will be 500, and the outer column 3,500. So basically depreciation is the decrease in assets, so entry will be revaluation account debit to asset account. So we will go on the revaluation account, means profit and loss adjustment account. Debit side will write depreciation on furniture, will write depreciation on furniture, so this is 1750, and depreciation on motor car, that is 1500. After that, student, you can see that what adjustment, livestock is appreciated and plant is appreciated. So livestock amount is 12,500 and plant amount is 22,500. So what we have to do, we'll go in the balance sheet and first we'll write the old balance sheet amount in the new balance sheet, that is livestock 12,500, plant 22,500. 10% appreciation means we have to add. So add in asset, outer column livestock will be 13,750 and outer column plant will be 27,000. 20% hike is there, appreciation is there. So this is the increase in asset. So increase in asset, journal entry is asset account debit to revaluation account. So in the revaluation account, credit side I'll go and write by appreciation livestock account 1250, whatever you have deduct appreciated 1250 and 4,500. So here appreciation in livestock and appreciation in plant I have recorded. After that, student, fifth adjustment, it's saying RDD is no longer necessary. Yes, previous year RDD was provided 500, but this year they are saying that this is no longer necessary. So this deduction will not be done this year, means this 500 is a benefit this year to the firm. So it is, we can say, the increase in debtor. We can say by this amount the debtor will be shown increased. So better this RDD will be recorded on the opposite side. Previously where we were recording on the debit side of P&L RDD, but it is no longer necessary, means it will not be deducted. So by RDD 500 I have written. After that, the amount payable to Kaka should be transferred to his loan account. So whatever the amount will be calculated as a closing balance, that is payable amount to Kaka, and that should be transferred to his loan account. This information is given. So now all the adjustment is over. So better what we'll do the total, students. The total of credit is 6,250. The total of debit is 4,250. So 6 minus 4,250, 2,000 is the remaining amount, or we can say the calculated closing value, or since the credit side is higher, means it's a profit. So in bracket we can write that to P&L adjustment account, sorry, actually this will go to the partners capital account. So you have to write partners capital account. Okay, students. So it's a profit, Mama, Kaka and Baba's ratio 4:3:3. You know that the balance is profit or loss is distributed in revaluation account in the old ratio. So what is the old ratio? You already know, student. 4/10, and Kaka's ratio is 3/10, and Baba's ratio is 3/10. So by calculating this formula, by applying this percentage or ratio, we'll get 800, 600 and 600. Since, student, it's a profit, two partners capital, profit and loss adjustment account debit. So in the partners capital account, this will be go to the credit side, and you will write on the credit side this share by profit and loss adjustment account. And already we have done this all transaction in capital account, general reserve, goodwill and all. So after closing, no any thing you can see on the debit side, the whatever the total will be there in the credit, that will be the closing balance for this capital account. So students, this is, we can say, the total, higher total, which is from the credit side, and it is written on both the side. And after no any balance is there on the debit side of the respective partners, the same amount will be there as a closing balance. But what they have said, just pay attention, the payable amount of the Kaka's account is transferred to his loan account. So what we'll do, for the balance of Mama and Baba will be written as a balance carried down, but the balance of Kaka will be written as a to loan account. So now students, it's very clear that loan and capital account closing balance will be shown in the balance sheet liability side. So partners capital account, I have written 23,300, 14,725, 14,725, which is the closing balance of Mama and Baba. Kaka's closing balance is a loan account, so I will write here the loan account. Okay students, now we have to see that what are the other things there in the liability and asset side, and which we have not written. Suppliers 7,000. So after writing this loan account, Kaka's loan account, okay, one more adjustment I think we forgot the adjustment number 4. In that they have given a provision of rupees 2,000 to be made for the claim of compensation. So it is just like a RDD. So they have done the provision, means they have reduced the profit by making the provision. So the two effect of will be this, that it will be recorded on the profit and loss adjustment account debit side, provision on the compensation, and that will be recorded in the balance sheet liability side, provision for compensation, capital provision, Kaka's loan, and the balance, remaining balance which had no any adjustment, supplier and loan 7,000 and 5,000 will record as it is 7,000 and 5,000. Now we can see the total of liability is, student, is 72,200. and now check whether we have taken all the asset. So students, we have taken the plant, machinery, furniture, livestock, but we have not written the debtor and cash. So we have to write the debtor as well and cash as well. So here we have to write debtor, I have written the debtor and cash. So there is no any payment. Opening balance of the cash was 4,500 and no any cash transaction is happened after that. So the balance will be written as it is. Now in the working note you can see that I have prepared one goodwill account, students. So goodwill account is already 2,700, higher total is written here, so 2,700, and the closing balance of the goodwill is 2,700 only. So in the balance sheet the goodwill will be also shown as a 2,700. So you can see the item which has an adjustment I have done and written the total in the outer column, and the item which has no any adjustment I have written the amount as it is from the old balance sheet. So now your balance sheet should be tallied. So let's see. Yes, your asset side total is also showing 72,200. So like this, students, 72,200 is a total. So you can see our profit is correct. We have calculated 2,000, 72,000, and Kaka's loan account is 20,175, and that we have written 20,175. It means we have done the problem correctly. Any doubt, ask me in the mid session. Meet you soon in the next video very soon. Thank you.